Good morning, everyone. Thanks so much for joining me today. My name is Krista Wetmore, and you're watching the Money Mindset Show. Today, I thought I would talk a little bit about tax-free savings accounts, TFSAs, and it's something that actually the TFSAs were introduced by the government Canadian government about 10 years ago. And it's only been really, and if I look at the stats, it's only been the last couple of years that it's actually increased in popularity. And actually, I was quite pleasantly surprised to be able to share some numbers with you. Percentage of Canadians that have a tax-free savings account is just a little under 70%. And that was pleasantly surprising for me as well. Considering that increase or that percentage is about a 25% increase over the past couple of years. So obviously the accounts, that type of savings vehicle has grown in popularity in the past couple of years, which is a great thing. The tax-free savings account is I would think often, I would say misunderstood, but perhaps misunderused as far as the strategic financial planning strategies that you can have if you incorporate a tax-free savings account. So let me just back up for a second, and I am pretty sure I've mentioned this at least one or two times before. When we look at true, I would say, financial planning or wealth accumulation, studies have shown that about 10% of your net wealth is due to the individual investments that you hold. So whether it's savings accounts, mutual funds, stocks, bonds, etc. So 10% of your wealth can be attributed to that. We know that an additional 20% of wealth accumulation is from asset diversification. So all that means is to ensure that you have different types of assets, perhaps different styles of portfolio managers, as well as where are you invested. So not always being invested in Canada, have some diversification around the world, that sort of things. That's what we're talking about when we say asset allocation. 70% of wealth is accumulated through financial planning and that advice piece. And the reason I say that is, and TFSA is a great example of this, because we know that if you don't have proper financial planning in place, taxation unfortunately erodes a lot of that wealth, and it can erode it very quickly. So that's where the tax-free savings account comes into. So the way I like to explain a tax-free savings account to folks, think of it as an umbrella. So it's a tax shelter. And so the umbrella itself is called the tax-free savings account. So it's just the type of umbrella that you have. And underneath that platform, you can have any different types of investments. You have savings accounts, GICs, stocks, bonds, mutual funds. So it holds a lot of different type of account, but the overarching, I guess, platform would be the tax-free savings account. And the benefit of it is anything that you put into it or money that you invest into tax-free savings account grows tax-free. And unlike an RRSP, the money that you take out of it is not taxable either. So that is a huge benefit when we're talking about financial planning. So what I do like, again, about the tax-free savings account, and there's a little known fact, and I think, there is some confusion, there has been some confusion about the account. So unlike an RSP, when you make a contribution, it's a tax deduction. So a tax-free savings account, if you make a contribution or a deposit to the account, you don't receive tax credit for it or tax deduction. So the difference is upon withdrawal. So withdrawal from a tax-free savings account, you can take the money out. So for example, this year, I need to put a new roof on my house, and it's $10,000, for example. So I withdraw $10,000 from my tax-free savings account. It doesn't affect my income at all because it's not included in my income as a withdrawal. Next year, I'm able to deposit that $10,000 again. So unlike an RSP, if you make a withdrawal from it, you're not eligible to put that money back in unless you have a RSP contribution room. Tax-free savings account, you are able to recontribute any withdrawals that you do make. So that is that's a key difference as well. So the just going to look at the number here. For those of you who may be watching who have never had a tax-free savings account, it's not too late. The great thing about it is it's not dependent on income. So every Canadian above the age of 18, as long as you're 18 years of age or older, everyone has the same contribution room. So if you've never contributed, this year in 2019, you're eligible to make a contribution or a deposit of $63,000 and $63,500. And every calendar year going forward, the contribution room allowable is $6,000. So that's quite a little chunk of change. So tax-free savings accounts and studies have shown, and there's been a little bit of, I would say, chatter online and coming out from different news groups about how Canadians are actually using the tax-free savings account. And a lot of folks are just using it as a basic savings account. And there's nothing wrong with that. But there are some really I'll give you a couple examples of, two different strategies or things to think about of how you should be using your tax-free savings account. So the first one that comes to mind, because it's back to school season, it's early in September, university students and college students are looking for money for their tuition. So the tax-free savings account can be a really great, I would say, partner to the RESP. So RESP obviously has been a great savings vehicle for a lot of Canadians because of the grants that the government provides. Partnering that with a tax-free savings account really gives you an additional boost. Again, because that money can be withdrawn tax-free, you can put it back into the account down the road, so you can use it as a retirement vehicle as well. So there's a couple different strategies to look at that. And again, when you're considering making contributions to an RESP. The other thing that I would talk to people about, talk to my clients about a tax-free savings account, is using it in partnership with an RRSP. And the reason for that is upon retirement, and this is kind of where we get into that 70% of clients' wealth accumulation has to do with good financial planning. And the reason for that, and this is a great example of taxation. And, it's great to save and have some money there at retirement. But if you're not going to withdraw that amount effectively, it could bump you up into a higher tax bracket and therefore erode a lot of your savings very quickly for taxes. But using a tax-free savings account in partnership with an RSP can create some great strategies for you. So for example, let me just give you a quick idea, is if you are if you receive a pension and you also have RSPs and you were drawing both of those, it may bump you up into a higher tax bracket. So there could be some clawbacks with old age security, pensions and that sort of thing. So you don't want to bump you up into higher tax bracket. Plus, at the end of the day, who wants to pay more taxes if you don't have to? Tax-free savings account, if you partner with an RSP, may be a great way to supplement your income upon retirement without actually bumping up your taxes. Therefore, you're not going to have any clawbacks. So using strategies like that, hopefully that makes a little bit clearer as far as how a tax-free savings account can be a good partner either with an RESP or an RRSP. And at the end of the day, the tax-free savings account is a great savings vehicle for any major purchases as well. If you're thinking of purchasing a cottage, yacht, vehicles, a dream vehicle down the road, or whatever the case may be, it's a great opportunity for you to be able to set money aside, and as well being able to take it out tax-free, and then down the road put the money back into it as well without having it affect your limits. So tax-free savings accounts, again, I'm pleasantly surprised about the number of Canadians that do have them. Again, I think there is an opportunity as well just to perhaps take it up a notch, I guess, and encourage folks to speak with your financial advisor, get some advice on how you can actually be using the tax-free savings account in a very efficient strategy and a tax strategy within your financial plan. So hopefully you've enjoyed the session today. It's early in the morning. I was hoping to get on the road. I have quite a few appointments scheduled for today. And my goodness, it's dark out. And to be honest, I think I'm still half asleep. So thanks for joining me today. Wish everyone a great week. And like always, if you have suggestions or ideas on topics that you'd like me to talk about, feel free to reach out. Actually, tomorrow I'm going to be joining Haley on her team and her show tomorrow at 1 o'clock. So if we don't chat with you before, we'll see you again next week. Have a great week, everyone. Bye-bye.